There is a lot of speculation on where the Fed will go next with interest rate cuts. Will it be 25 or 50 basis points, or will they watch the labor numbers and sit still? Fed Chair Jerome Powell recently spoke about the outcome of the last meeting and gave us a clue as to where rates are headed.
The bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean two more cuts. It wouldn't mean more 50s.
So if slow and steady is the Fed's strategy, how does that help the pre-retiree right now?
Well, when you look at interest rate cuts and how it can help or impact retirees, I always think there's pros and cons no matter what's happening out there. So it's a matter of making sure that you get in the right position to be able to take advantage of it. First of all, I think if we look at some of the potential drawbacks that we can see for retirees, just recently what we had is 20 plus year record level highs. I mean, I haven't seen money market accounts, CDs, or fixed products, paying as high as the fixed rate that they were. Heck, we were talking on the show a couple of years ago about government savings bonds paying over 9% for a period of time. And I think it was when I was just a little kid and my grandmother put a savings bond in my, Halloween candy or in my Easter basket that was the last time that was a good idea to invest in savings bonds. But those rates got so much more attractive. So there is some drawback, I think, of lower rates. And what that means is that lower rates means lower potential return from things like CDs and money market accounts and fixed products. The good news is they haven't yet lowered rates tremendously. They did lower rates by 0.5%. They're looking at, as Jerome Powell talked about, lowering rates yet again. So if you haven't taken advantage of putting some of your lazy assets to work, there's still some really good opportunities to look at locking in some of the rates before interest rates do go back down, because it not only impacts those savings rate, it can also reduce what some of the annuity offers are out there. With annuities, I'm predominantly talking about what is called a fixed annuity that would pay a fixed rate of return for a set period of time, or an index annuity. And an index annuity is an account that allows you to participate when an underlying index goes up, but protects you against loss when the markets go down. So as interest rates go down, those rates will also go down. And then the other risk for not just retirees, but for all of us, is if they lower interest rates, it could create another inflationary problem, which is why they began increasing interest rates, to begin with. On the flip end of the scale, Dave and we talked recently about this, and we shared some of the insight at our economic summit. When the Federal Reserve is lowering interest rates in a non-crisis environment, which is kind of what we're in right now, historically speaking, that can be another boost overall to the stock market. Time will tell if that proves to be true, but when you have companies that have lower borrowing costs, that ultimately results in higher potential profits, which could result in higher stock prices. So that can be good for those retirees and all of us in the equity market. Lowering borrowing cost. When I look at some of the key characteristics that I think of when I think of, successful retirement, I would say being debt-free is a general characteristic that I think that all retirees should shoot for. But I know some retirees, they have another mortgage. Maybe they have a second home. When you have lower cost, or if you're, considering getting a property at another destination location, that's going to result in some of the lower borrowing costs. I just wrote an article for the Toledo Free Press. You can check it out at ToledoFreePress.com. Click on the column, and I talked about some of the advantages, some of the interviews that I did with some of the local mortgage brokers and real estate agents about, the housing market, because what that can transpire into is rising asset prices, such as your home. We've seen the home values go up, and that's good for a retiree if they want to maybe end up tapping into some of the equity that they have in their future at some time in the future and utilize that. So it can be some really good things that it adds to overall where you can take advantage of things with the lower borrowing cost, possible shorter term boost overall to the market, increased potential maybe in your housing. But again, there are some negatives as well, but there is this window of time before rates get too low. So if you have accounts that you're not earning what you feel is your fair share, and you just want to see what is available within the market space, whether it's money markets, CDs, or annuities, reach out to us. We'll be happy to kind of go over how to take advantage of where current rates are today.
Threats and opportunities is a theme that the guys at America's Retirement Headquarters often have in their events that they do, and it is something that they look at very carefully, the threats that are out there, the opportunities that may arise from these seeming threats. So if you have questions about what to do in this current interest rate environment and in the environments to come, set up a time to speak with them. Hopefully, be able to explore those options. 419-794-3030 is the phone number. Once again, 419-794-3030.